silver has been sitting quietly, and most people have completely missed what's been building underneath. Right now, the roadmap to $2,000 silver is not a fantasy. It's a mathematical reality that's already in motion. Let's start with where we are. Silver is currently trading at levels that, historically speaking, represent one of the most undervalued positions in modern financial history. When you strip away the noise, the Fed statements, the equity market headlines, the crypto hype, what you're left with is a metal that has been suppressed, manipulated, and overlooked for decades. And that suppression is cracking. Here's the roadmap. The first stage is what we're seeing right now, the quiet accumulation phase. Central banks, sovereign wealth funds, and industrial buyers are loading up on physical silver at scale. This isn't speculation. The data from the Silver Institute shows that industrial demand has been hitting record highs for 3 consecutive years. Solar panels, EV batteries, defense electronics, AI hardware, every single one of these sectors needs silver, and none of them have a substitute that works at the same cost and efficiency. The second stage is the supply squeeze. Global silver mining output has been declining. New mines take anywhere from 7 to 15 years to come online. The reserves that exist today are being depleted faster than they're being replaced. When industrial demand is growing at this pace and supply is shrinking, basic economics tells you where the price goes. The third stage is the monetary reset trigger. This is where the $2,000 number starts to make sense to people who've never considered it before. Silver's historical ratio to gold has averaged around 15 to 1 over thousands of years. Today that ratio sits above 80 to 1. If gold is trading at $3,000, which it already has, and the ratio reverts even partially toward its historical mean, silver at $2,000 is not just possible, it's conservative. Now let me give you the catalyst that could accelerate all of this. The US dollar is under structural pressure unlike anything we've seen since Bretton Woods collapsed. BRICS nations are actively building trade settlement systems that bypass the dollar. When confidence in fiat currency erodes at the sovereign level, hard assets don't just rise, they reprice entirely. Gold reprices first, silver follows. But silver moves faster and harder because its market is smaller, its float is thinner, and once momentum builds, the short positions in the paper market get absolutely crushed. There are large institutional short positions on silver in the COMEX futures market that have existed for years. When those positions are forced to cover, whether through a physical delivery squeeze, a regulatory shift, or simply a momentum surge that makes holding those shorts financially catastrophic, the price does not move gradually. It gaps. It spikes. It leaves retail investors watching from the sidelines wondering what just happened. The investors who are positioned now in physical silver and in high-quality silver mining equities are sitting on what could be the most asymmetric trade of the next decade. You're looking at a potential 20x, 30x, even 50x move from current prices if the full roadmap plays out. And here's the thing that most financial media will never tell you. Silver is one of the only assets where small retail investors still have the ability to accumulate meaningful positions before institutional money fully arrives. The window is open. It will not stay open. So the question isn't whether silver goes to $2,000. The question is whether you'll be holding it when it does. Do your own research. Stack accordingly.